Gold prices, big bullish momentum so far in the month of August, and we're expecting some further buying pressure because the fundamentals, the macroeconomics are really lining up for the precious metal. We had this reversal when you look at a naked chart. We had this reversal here in July and obviously being validated with some buying so far in the month of August. If we go to the weekly a moment, you can see what we're doing here is we're breaking structure. We've broken structure last week where we were printing these lower highs, these lower lows, big breakout of that structure, leaving the door open to some further buying pressure. And really, when you look on this weekly here, you can expect the price to be drawing into back to the next areas of liquidity, which would be 4,500. If we look further to the north, 4,800 and then 5K. You know, the roadmap is potentially there for gold. On the daily, okay, we're trying to grind down this area of supply here, as you can see, at sort of 43.50. Once we grind that down, we could push to the upside on the 4 hour, trying to break out of this narrowing pennant. You can see there's this consolidation going on, but looking increasingly likely, knocking on the door to potentially breaking out, similar to what you observed there for euro and the other dollar-related pairs. Got his flag, like we had here, flag, breakout, flag, breakout. And obviously, if we do break this out and grind this zone down, we're going to be drawn into here, okay? So buying pressure at the moment for gold. And the reason being for this, when you look at the CME Fed Watch tool, rate hike probabilities have largely come down because we've had a softening in stance from the FOMC. Remember, at their last session, 9 members said unchanged. Then we had the intervention from US and Japan selling dollars. So that's the weakness in dollar there. And then also last week, we had the non-farm payrolls number, which called jobs were lost. And we expected this. Jobs were lost. Unemployment rate, fine, whatever. But the average hourly earnings, this is deflationary. What people are getting paid is coming down. If people are getting paid less, they're going to be spending less. Does that make sense? So it's deflationary data, supportive of upside pressure for gold because it reduces the probability of rate hikes. Guys, in terms of all this knowledge, you can check out the links via below. Okay, all this knowledge, put links via below or somewhere wherever you're watching this video. Other than that, guys, if you are watching this video, by the way, I wasn't going to announce this yet, but there is an opportunity to get in on our AI-powered systems. Obviously, my self-powered, AI-powered. Follow what we're doing with gold. Well, our systems are doing. It's all automated. You can see the track record, the stats of the system as well, somewhere below in this video, wherever you're watching this. And it's live now, okay? We're live with one of our providers that we're using, so you can check that out. If you are interested, you can copy that, okay? Hands off, hands off. Other than that, stay lit, stay blessed. I'll catch you on the next update.